my name is Ahmad Tarmizi. My meeting number is 301419. Today, I will briefly introduce about the Bank Islam Malaysia Berhad. Bank Islam was established on 1 July 1983 as the first Islamic bank in Malaysia and later become the first Islamic bank listed on the main market of Bursa Malaysia. In line with value-based intermediations, Bank Islam focuses on sustainable and responsible growth by balancing profitability with social and environmental responsibilities. The bank operates based on Islamic principles such as the prohibition of interest or riba, risk sharings, and ethical financing, with all activities strictly governed under Sharia supervision. Bank Islam is regulated under Islamic Financial Service Act 2013 and complies with Bank Negara Malaysia's Sharia governance policy to ensuring a strong Sharia governance and accountability.
Hi, my name is Kum Kah Lok. My metric number is 298955. So now I'm going to present the part data and methodology. So for this part, okay, they were divided into 4 sections, which is ratio analysis, risk analysis, and sustainability ESG indicator, as well as an anti-money laundering, fraud, and cyber risk indicator. And this study will cover a long period of 11 years from 2014 to 2024. So now I'm going to jump to the first section of this part, which is ratio analysis. So there are 6 ratios will be evaluated in this section, which is return on assets. Okay, measure how efficiently the bank utilizes its asset base to generate profit. Second, return on equity, measure the return made to the shareholder. Loan to deposit ratio, determine how much the deposit has been utilized to finance the lending activities. Capital adequacy ratio determines the capacity of the bank to sustain the unforeseen losses and remain floats. Cost to income ratio, assess the efficiency of operation by comparing the operating expenses against the operating income. Non-performing loan ratio, so measures the quality measurement ratio in terms of credit efficiency, as well as the quality assessed in terms of the percentage of the loan in defaults or near default condition. Next, for risk analysis, there are 5 ratios will be evaluated, which is credit risk, which is indicate the possible effect of the compromising financing on the capital base of the bank. Liquidity risk, measure the capacity of the bank to cover the short-term liability with highly liquid asset. Interest rate risk, determine the sensitivity of the bank to the market interest rates. Market risk reflects the exposure of the bank to any change in the market environment. Capital risk indicates the level of financial leverage. While third part is sustainability and ESG indicates. So there are 3 parts, okay, in this indicator, which is ESG, environmental, social, and governance. So for environmental, will be measures the bank environmental responsibility and sustainable financial effort. Social will evaluate the bank's contribution to the social development and human capital, and governance will assesses the quality of the corporate governance of oversight of the Bank Islam. Now come to the last part, which is anti-money laundering, fraud, and cyber risk indicator. So for the first part, anti-money laundering, so it will indicate the bank regulatory compliance and also the financial crime prevention capability. For fraud risk, will be evaluated using the fraud loss ratio and the number of reported fraud cases where the data are available. For the cyber risk, will be indicate, okay, capture the bank exposure to the technology-related threats arising from the digital banking.
Hi and Assalamualaikum everyone. My name is Nisrina Nabihah binti Nor Azhar and my metric number is 297360. Now, I present about Bank Islam Malaysia Berhad's performance analysis from 2014 to 2024 that covering several key financial metrics. Okay, first, profitability ratios. Return on assets peaked at 1.21% in 2019 but has declined significantly to 0.59% in 2024. Indicating challenges in generating returns from assets due to increased operational costs or inefficient utilization. Okay, next is return on equity. Return on equity shows an even more concerning trend that dropping from strong double-digit returns of 16.78% in 2014 to just 7.48% in 2024. This decline suggests insufficient profit generation relative to shareholder equity that potentially impacting investor confidence. Solvency ratio. Capital adequacy ratio has improved impressively from 13.36% in 2014 to 20% in 2024. That is far exceeding the Basel III requirement of 10.5%. This demonstrates strong capital buffers and excellent risk management capability. The next is liquidity ratio. The loan to deposit ratio reveals a troubling trend that climbing from a healthy 72.58% in 2014 to 110.90% in 2024. LDR above 100% means the bank is lending more than its total deposits, that indicating potential liquidity strains that require immediate attention through increased deposit mobilization or limited lending growth. The other one is efficiency ratio. The cost-to-income ratio shows excellent performance, improving from around 50% in 2018 2018 to 2020 to 32.89% in 2024. This is well below the 15% industry benchmark, indicating strong operational efficiency and cost management. The last one is non-performing loan ratio. The non-performing loan ratio remains exceptionally healthy at 1.07% in 2024, consistently staying below the 3% healthy threshold. Despite a temporary rise to 1.29% in 2022 due to COVID-19, this demonstrates excellent credit risk management. So, the conclusion is Bank Islam presents a mixed picture that excelling in capital strength, efficiency and asset quality, but facing serious challenges in profitability and liquidity. Strategic initiatives are urgently needed to address declining ROA and ROE while managing the elevated loan-to-deposit ratio. That's all from me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nurul Uzma binti Borhanoddin. My matric number is 300708. So today I will present about the risk analysis for this Bank Islam Malaysia Berhad. From 2014 to 2024, Bank Islam Malaysia Berhad strengthened its risk management to balance financial performance with long-term stability. The bank focused on 5 key risks, which is the first one is credit risk, liquidity risk, interest rate risk, and market risk, and the last one is capital risk. This approach helped BIMB manage challenge, protect stakeholders, and ensure continuous growth. So the first one is credit risk management. What is credit risk management? Credit risk management is fundamentally about navigating uncertainty, and to understand our current position, we must look at the historical data that brought us here. Between 2014 and 2024, our credit risk profile has been defined by significant volatility. We began this period in a very stable position with a risk level of only 1.72% in 2014, but this was followed by a sharp climb to 15.58% by 2016, where we saw a brief successful recovery where risk dipped back down near 2% in 2019. The onset of the pandemic era triggered a massive surge. This led us to a 10-year peak of 17.18% in 2021, representing our highest exposure in a decade. However, the most important takeaway today is our recent progress, which over the last 3 years, we have achieved a consistent downward trend, successfully reducing risk to 9.65% as of 2024. This trajectory suggests that while we remain cautious, our current mitigation strategies are effectively stabilizing the portfolio. Beyond credit concerns, we must address our liquidity risk, which represent our ability to meet immediate financial obligation and deposit withdrawals without disruption. Looking at our performance over the last decades, the data reveals a period of a relative stability followed by significant improvement in our liquidity position. From 2014 to 2018, we navigate a gradual upward trend with risk peaking at 8.69%. However, a major shift occurred in 2020 as levels dropped sharply to 4.49%, remaining remarkably low during the pandemic years. While we saw a temporary spike to 7.95% in 2022, we have since returned to a very strong position, ending 2024 at just 4.47%. For an Islamic bank like BIMB, these figures are particularly encouraging. They demonstrate that our Sharia compliant funding method are successfully keeping our asset liquid and our obligation covered, even without traditional interest-based borrowing. So now we move to our next category, which is interest rate risk, which represent the threat that market fluctuation will negatively impact our financial stability. As an Islamic bank operating in dual banking system, BIMB is uniquely exposed to changes in the OPR, which is overnight policy rate. If we cannot match the higher returns offered by conventional competitors, when rates rise, we risk losing depositors seeking better yields. So looking at the data, our risk level has remained consistently high, starting near 120% in 2014 and reaching a 10-year peak of 110.19% in 2022 after a significant pandemic era, dipped to 61.90% in 2020. As of 2024, the risk has stabilized at 105.42%, a figure that underscores the intense competitive pressure we face to maintain Sharia compliant returns that are attractive enough to retain our deposit base while protecting our overall profit margins. Next, we turn our attention to market risk. This graph illustrates the volatility we have faced due to fluctuation in exchange rates and equity price over the last decade. We saw an early dramatic spike in 2015, where risk hit 14%, but the most interesting period occurred between 2018 and 2019, where the values actually dipped into negative territory, bottoming out at negative 2.76%. This indicates a period where market movement may have actually worked in our favor or were significantly hedged. However, as we entered the post-pandemic era, which from 2020 onwards, the risk level out into a very stable picture. For the last 4 years, we have maintained a remarkably consistent range between 5.1% and 5.8%, ending 2024 at 5.5% only. This recent stability is a testament to our improved foreign currency dealings and investment strategies, which have successfully shielded the bank's asset value from the more extreme market swings we saw in the past. And last but not least, we address capital risk, which is the risk that the bank lacks sufficient internal funds to cover potential losses or business risks. For Bank Islam, capital acts as our ultimate safety cushion to protect depositors and satisfy regulators like BNM. Looking at our performance over the last decade, we have maintained a very stable and resilient capital position. We began in 2014 with a risk level of 6.6%, and while we saw a peak of 8.59% in 2017, the overall trend has remained remarkably consistent. Even during the global uncertainty of 2020, our risk stayed controlled at 7.31%, and we have closed out 2024 at a strong 7.89%. This steady performance demonstrates that BIMB is maintaining a healthy control capital ratio, ensuring we remain a stable, fully focused Islamic bank capable of supporting new financing requests while keeping our depositors' funds secure. So that's all from me. I will pass to the next presenter. Thank you.
Okay, next I will discuss the sustainability and ESG practices of Bank Islam Malaysia Berhad. Sustainability and environmental, social and governance, or ESG, have become increasingly important in the banking sector. Banks are now expected to create a positive impact on society and the environment, in addition to generating profits. As a full-fledged Islamic bank, Bank Islam is well positioned to integrate sustainability into its operations, as Sharia principles emphasize ethical conduct, social responsibility, and risk sharing. From an environmental perspective, Bank Islam demonstrates its commitments through green and sustainable financing initiatives. The bank supports environmentally friendly and sustainable development projects that align with Malaysia's national agenda and Bank Negara Malaysia's climate-related initiative. This effort to help promote a low carbon economy while also managing a long-term environmental risk that may affect asset quality and financial stability. Internally, Bank Islam reduced its environmental footprint by promoting paperless banking, digital transaction, and online services, which minimize operational waste and improve efficiency. In terms of social aspects, Bank Islam places a strong emphasis on social responsibility, in line with Islamic values of justice and inclusiveness. The bank promotes financial inclusion by offering Sharia-compliant financial services to individuals, small businesses, and undeserved communities. This includes affordable financing for homes, education, and SMEs. Bank Islam is also actively involved in CSR activities such as zakats, contributions, charitable programs, and community development. Additionally, the bank prioritizes employee well-being through training, talent development, and safe working environments. Lastly, for governance, Bank Islam maintains a strong governance framework that ensures transparency, accountability, and effective risk management. The bank has a well-structured board of directors with a balanced mix of executive, non-executive, and independent members. A key strength is a Sharia governance structure supported by a Sharia Supervisory Council, which ensures all operations comply with Sharia principles. This strengthens overall governance through additional oversights.
Assalamualaikum and a very good day to Dr. Hilmi. My name is Nor Alisya binti Ahmad Tarmizi with metric number 297674. Now I will continue the presentation with the challenges and strategic issues that faced by Bank Islam and also the recommendations. The resultant factor of economic instability might be decreased consumer spending and business investment because of local conditions like alteration in governmental policies or global conditions like global recessions. In this case, customers will be less likely to loan money and business will delay or reduce their investment. Also, when business and individual have a difficult time covering their obligations and payment due to the economic downturn, the risk of loan default will increase, which is another contributor to the poor quality of the bank assets. This does not only impact on the profitability of the bank, but it can also affect its reputation and capacity to raise funds in the financial markets. Bank Islam has been functioning within a very competitive banking environment in Malaysia where it is subjected to acute competitions by the conventional and also Islamic bank. The Malaysian banking industry is a major one and it has a well-established network of players who provide a wide variety of services. This means that Bank Islam has no option but to continually innovate and compete with not only traditional participants such as Maybank, CMB and RHB, but also other Islamic banks which are also vying with a similar target customer base. Such banks usually have the opportunity to provide interesting interest rate and full package and a high-tech solution to attract a broad client base. Moving on to the regulatory issue that faced by Bank Islam is when the banking fine handed out by the Bank Negara Malaysia to the Bank Islam totaling around 3.4 million for non-compliance with Islamic Financial Service Act 2013. It has brought to the fore a number of important and intersecting issues to the bank to the extent that they affected both its operations and long-term strategic placement. Due to penalty issue cases, it affects Bank Islam reputation and also trust. Since Bank Islam is faced with economic fluctuations, competitions, and regulatory fines, the bank should take a holistic approach that will not only focus on short-term issues but also make the bank resilient and sustainable in the long run. Bank Islam should focus on improving its system of operations and compliance models in order to maneuver successfully through the regulatory penalty issue. To begin with, Bank Islam ought to invest in enhancing its risk management framework in order to make certain that it fulfills all the high-quality standard of the regulatory standard established by BNM. This involves automation of compliance procedure, and by integrating modern technology like blockchain and also AI, it will be possible to conduct compliance tracking in a more efficient way, with the bank having an easier time to identify and report suspicious actions. Moreover, the program of staff training and constant education needs to be extended to ensure that the staff is up to date with the latest regulation and has no lapse in compliance. Moreover, with the competitive threat posed by both traditional and non-traditional financial institutions such as fintech and digital banks still increasing, Bank Islam needs to focus on its digital transformation. Digital banking and fintech collaboration will enable Bank Islam to be more competitive in terms of the growing popularity of mobile banking and online-only financial services. To address the economic instability and inflation, Bank Islam should concentrate on the enhancement of its financial sustainability and containment strategies on operation costs. The economic climates might create a reduction in the demand of loans and the likelihood of default. Thus, the bank must have solid credit risk management practice that will ensure that the risks are recognized and mitigated early. Lastly, in a big secure long-term success, Bank Islam need to invest in strategic diversification and expansion by introducing innovations. This might include an increase in Islamic finance offering, including Sukuk, Islamic bond, or Islamic investment fund, in order to assess the emerging markets.